Hi. So welcome back. Let us see other important definitions, other important amendments, and particularly start with the definitions, because definitions have a lot of importance to look into, because practical questions, these two definitions, particularly inputs and capital goods. See, both inputs and capital goods have a lot of importance in practical questions, and they affect. For example, I tell you, earlier, any appliance or equipment used in an office, that's not capital goods, that doesn't qualify, you are not getting any CENVAT credit, that has been omitted. See, a lot of importance, lot of weightage is there. So any office equipment was not capital goods earlier, now it is capital goods. See, a lot of difference, it makes a lot of difference. See, practical questions, for example, air conditioner used in an office, it was not capital goods, now it is capital goods, because that has been omitted, right? So very important point. Second point is, of course, wagons of subheading 86, here 860692, chapter number 86, heading number 6 and subheading 92. Wagons of subheading, these are now capital goods. Earlier, no. Now they are capital goods. So naturally, capital goods both for manufacturer and service provider. And next, capital goods for a manufacturer used outside the factory for pumping of water. I repeat, capital goods used by a manufacturer outside the factory for pumping of water. For water pumping, whatever capital goods he is using, they are also capital goods. Earlier, only capital goods used outside the factory for a captive power plant. Now, for captive use, water pumping takes place outside. If any capital goods are taken out, they are capital goods. And correspondingly, under Rule 2K also there is a definition. There is an amendment. What is that amendment? They say inputs includes goods used in pumping of water. So in pumping of water, wherever it is connected with the factory activity, any goods used, they are inputs. So for pumping of water, goods used are inputs. For pumping of water, capital goods used are capital goods. So there is eligibility of CENVAT credit. These two things, please take care. Remember this. Okay. And as far as the definition of inputs are concerned, 2K, there is some significant development also, because this also affects the capital goods part. What is that? It says goods up to the value of 10,000, capital goods up to, see, up to rupees 10,000 per piece, up to the value of 10,000 rupees per piece are inputs. See, basically capital goods, but value, if the value happens to be per unit, yani per piece, if it happens to be 10,000 or less, up to 10,000 means it is treated as input. Means you will get full credit. Earlier you were getting, even if it is a small item, you were getting only 50% and the remaining 50% next year. It's something cumbersome. So government said, say up to 10,000 worth of any piece, we treat it, even though it is capital goods by definition of capital goods, we treat it as input and take full credit. The implication is simple. Credit will be available naturally, but automatically. But the thing is, you will get 100% if it is having the status of input. That's how it is done. Next, exempted service. Say this requires exempted service. Rule 2E. What do you mean by exempted service here? Exempted service here means, fully exempted service, non-taxable services, and abated services, which are where abatement is granted subject to the condition that CENVAT credit is not available. These things are already there. And the export of service is not an exempted service. Disqualifications, very important. If the service is export, it's not an exempted service. Export service. Why? Because exempted service and export service, there is a lot of difference. In the case of exempted service, only the terminal, the output level tax is exempt, but input level tax, no CENVAT credit, no refund, and automatically that becomes a part of cost of operations. But whereas in the case of exported services, output level service, no tax obviously, because it is outside the territory of India, non-taxable territory. But what about the input level taxes? Whatever input level taxes you pay, on inputs and input services, you will get a rebate, means a refund. So zero tax. Exports are zero tax, exempted services are not zero taxed, but export services are zero taxed. So export services are not exempted services, right? They will get full benefit. Number two, recently they have added one more thing, that is vessel from the customs station. Let me read out that full part. So, transport of goods, service by way of transport of goods by a vessel. Vessel means ship, from customs station of clearance in India to a place outside India. So, there is a customs clearance station. Say for example, a port, seaport, Mumbai port is there. Ship is there and Mumbai port is there. And from Mumbai port is a customs station in India where clearance takes place, and in India to a place outside India. Say for example, this is moving to Singapore, right? So this is Mumbai port is a customs port of clearance in India, and the transport of goods through the ship is to a place outside India. Here the in between the transport, the in between this and this, no doubt it is outside India. On output level, output service tax is not payable, it's good. But what about the service provider whose input level cost, input level taxes? So now it is not exempted services. It's not an exempted service. So why this is not an exempted service? Government wants to give this zero status, zero tax status. Earlier it was only exempted service. Now it is a zero tax service. So how? Look at Rule 6.6. In Rule 6.6 also they have corresponding Rule 6.6 and 6.7. You have to refer to Rule 6.7 because this is relating to services. So there also they have added these amendments stating that if the service is provided, goods transport service is provided by a vessel from moving from customs clearance, from the customs clearance house to a place outside India, then CENVAT credit is still available. So still available means you are enjoying CENVAT credit scheme, at the same time you are not paying any service tax at all. So which means that zero tax benefit they are giving. Rule 66A, let me read out for your benefit. I'll read out that. So there is a link here. You have to read together. Then only you will be able to link up and understand why this is not an exempted service. In exempted service, only one-way benefit. And in zero export service or zero taxed service, two-way benefit is there. Input level credit is available or refund is made available. At the same time, output level there is no service tax. Say, when a service is provided or agreed to be provided by way of transport of goods, by a vessel from customs station of clearance in India to a place outside India. So CENVAT credit is available on this activity. Done? So because CENVAT credit is available, on output service, no service tax is payable. Input level CENVAT credit is available, which means there is zero tax benefit available. Zero tax benefit is available. Right? So major changes in the definitions, and of course if you look at input service distributor defined under rule input service distributor ISD. This input service distributor rule 2M defines that office of a manufacturer, office of a service provider, which pays for the services procured and which distributes through a challan, bill or invoice to such manufacturer or service provider. Such means to others belonging to that particular unit. But they have added now a manufacturer, another outsourcing unit, he can transfer it to distribute the credit to other manufacturing unit, outsourcing unit. Other outsourcing unit he can transfer. For example, it can be distributed credit to an outsourced manufacturing unit. That is the language used. Outsourced manufacturing unit. Outsourced manufacturing unit. Outsourced manufacturing, what do you mean by outsourced manufacturing unit? Sometimes a manufacturer has to get the job done through somebody else. Some other manufacturer is there and he is sending the goods there. So it is outsourcing. So there also the credit he can transfer, not only to the units belonging to him around, but also to others, where some job is done through others. Okay, so that is definition under rule 2M. And what about rule 2L? Actually, input service. Input service is rule 2L. Right? Small amendment, small change. What is it? It says sales promotion includes, because sales promotion activity is an input. So whatever service tax is paid on sales promotion activity, you will get CENVAT credit. But what is sales promotion? Sales promotion includes, they have added now, includes services by way of sale of dutiable goods on commission basis. Dutiable goods on commission basis. Say the dutiable goods are sold through somebody and you are selling through commission agents. And when you are selling through commission agents, you are getting credit now. So whatever commission you pay, naturally that commission agent, he is also collecting service tax from you, and that also input service. So on that you will get credit. Whatever you pay to the commission agent in terms of service tax, that is available as credit. That is the amendment made in Rule 12, and mainly speaking, these are the areas where the changes took place. Okay, and as far as Rule 3 is concerned, let me tell you, major change area I have already discussed, matching principle under Rule 3, and one more small thing is also there, ship breaking, etc. See, in ship breaking, etc., in Rule 3.1, they specified earlier CVD portion. CVD portion means, you know, CVD, special CVD and BCD. These are the three duties payable on imported goods. But on CVD, there was a restriction. Ship breaking units, floating units, boats, etc. If they are brought to India, imported in India for ship breaking, etc., they ship break and they sell in parts. So on them, the CENVAT credit was, CVD portion was restricted to 85%. Now that has been removed. Now you will get 100%. CVD, on CVD you will be getting 100% credit. Earlier, on goods imported for ship breaking, etc., ships, etc., imported for ship breaking, etc., only 80% of CVD paid was available. Now 100% available. That's it. And Rule 4, of course, in Rule 4, there are certain things noteworthy, certain changes that have taken place that you have to take note. Number one, you know, on capital goods, as per Rule 4.2, how much is the credit you will get in the first financial year? 50% maximum, and the remaining 50% next financial year, if the goods are in position. But at the same time, you know, there are three valid exceptions where the importer will get 100% credit in the same financial year. Case number one of the cases, not one. One of the cases is SSI units. Small scale industrial units will get 100% at a time on capital goods imported. Not 50%. They can take 100% at a time. Right? But what is an SSI? You know, as per notification 8/2003, SSI means whose previous year turnover was not above 4 crore rupees, right? But a new category of SSI has been added here. Now articles of jewelry, of course, other than articles of silver jewelry. Articles of silver jewelry is an exception. Other than that, any article of jewelry and the manufacturer is an SSI whose turnover is not above 12 crore. So, in the case of articles of jewelry, the turnover limit to consider that a unit is SSI is 12 crore, and whereas for others, as usual, 4 crore. Specifically for articles of jewelry, they have kept it as 12 crore rupees as limit. Got it? So remember this. This is one important area. And next one is 4.5b. 4.5b. Remember, goods sent to job worker under Rule 4.5, and B part. That B part is talking about goods sent to, see, molds, jigs, fixtures, jigs, fixtures, molds and dies can also be sent to job worker for process. that facility is there, still you can enjoy credit. Then what they have done is they have added something called tools under chapter 82. So tools can also be sent. Not only that, they can be the goods sent to a job worker, molds, dies, fixtures, tools, etc., whatever if the list is there, the goods sent to a job worker can also be further sent to some other place, some other job worker or manufacturer, as the case may be, for further process or further job. They can be sent directly from there, that facility they have given. So this is rule 4.5b. And what else is there? And 4.6, a small thing, rule 4.6. What are the changes they have given under rule 4.6? Under rule 4.6, I think this looks clumsy. Let me eliminate. ये eliminate करने से थोड़ा सा, by eliminating this we will get some, otherwise it looks like quite clumsy. Okay, let us remove this because bygones are bygones. It's not moving, going. Okay. No response. Non-responsive. Let us try. This is non-responsive. Okay. So rule 4.6. What is there in rule 4.6? You know, goods sent to job worker can be dispatched from the premises of the job worker. You know, you can get the goods dispatched from the premises of job worker. That okay. Now the provision is, you know, the goods can be sent to job worker for processing. Goods means inputs here. Sent to job worker for further processing, etc. And after that, normally the goods are said to be coming back to you, and you dispose of as necessary, as possible. Now, so what has been done is, already there is a provision. There was a provision. The provision was, you can get the goods dispatched directly at the premises of the job worker to the customer or otherwise, without, you need not bring them back. This is to save time and cost. But for that, the requirement was, you have to take the permission of AC or DC. Assistant Commissioner or Deputy Commissioner has to permit and explain, give a letter in writing and give all the details that he requires, and if he is satisfied, okay, now you can get the goods dispatched directly from your job worker. Because you have already taken credit here and you are using the credit. So his permission is necessary. And that permission was valid for 1 year. But now the permission is valid for 3 financial years. Of course, year means financial year. This is valid for 3 financial years. Let me explain. Say you are in Delhi and your job worker is in Mathura. Okay? And your customer is in Agra. Delhi to Mathura, Mathura to Agra. Right? So you sent inputs to your job worker in Mathura, and he will process them, and he is supposed to get you back to Delhi. But your customer is in Agra, it is on the way. It is on the way. Instead of coming back, say, suppose the goods come back here, and from here goods are dispatched to Agra, it is too much. Long journey, waste of time and energy, waste of transportation cost. So, facility has been created under 4.6. It says, yes, but you can directly get the goods dispatched from job worker to a customer. So he can give delivery at his premises directly. The goods need not be brought back to Delhi, to the source. So for this, permission was necessary from ACDC, and the permission was valid for, you can say, 1 full year, 1 financial year. So not every time. Once you take a permission in a financial year, it will be valid up to 31st March. So n number of times you may get the goods released, delivered from your job worker, still 1 permission is necessary. And after 31st March, in the next financial year, you take 1 more permission that is valid for 1 financial year, like that. So validity was for 1 financial year. Now in the current budget, what they have done is, the validity has been enhanced to 3 financial years. Now once you take take permission from ACDC for 3 financial years, you can use that facility without intimating or taking permission from ACDC. So 1 year has been made 3 years. Please take note of this. Okay. And next, in Rule 4.7, of course, this is significant. Why this is significant, you will come to know. Rule 4.7 is talking about CENVAT credit on input services, right? And it says on input services, you are eligible to take credit. If it is reverse charge, you will get credit the moment you pay. If it is otherwise, you will get on the date of invoice. Of course, you have to pay within 3 months, otherwise you have to reverse the credit. Okay? But it also says, it's a very important provision, you are aware. It also says that you have to take CENVAT credit within 1 year of invoice date. So if you delay, suppose if you take more than 1 year, you are not able to book credit, make an entry within 1 year lapse, you will lose the credit. So obviously you have to take within 1 year of invoice. But there is an exception, special case now. So as per Rule 4.7, what is the special case here? You know, the special case is services provided by government or local authority by assigning some natural resources on some remuneration, on some consideration. Natural resources. Assignment of right to use natural resources. Assignment means transfer. So assignment of right to use natural resources. So now it is taxable. You know, maybe you are able to link up. Look at services provided by government under the negative list. Section 66D, A part. The last part says any services provided by government, any service provided by government to a business entity is taxable. Earlier, it was a business supporting service, not every service. But now any service provided by government to a business entity is taxable. Obviously, natural resources were being assigned by government or local authorities to any person, and service tax was not payable. It was exempt. Now it has become taxable. So once it became taxable, what they did was they made the services provided by government to business entities. So it is under reverse charge. The service receiver is to pay service tax. Reverse charge. So government is not liable to pay, but service receiver is liable to pay. Only relief or relaxation is if the limit happens to be, if the business entity's previous year turnover happens to be below 10 lakh or not above 10 lakhs, no service tax, otherwise he is liable to pay service tax as if he is the provider of service. It is under reverse charge. Okay, and another consequence is huge amounts are involved sometimes. So natural resources allocated, say for example mining services, mines, coal mines or some other things, minerals. So excavate, extract, mica, you extract, you do this for 2 years, 1 year, like that. On lease basis or on assignment basis, natural resources are allowed to be used by a private party, by government on some amount. It may be upfront amount or it may be installments. So now it has become taxable and the amount will be very huge. So government has devised a plan. It says such amount you should take in 3 equal installments, not at a time, not immediately, not at a time. In 3 equal installments you should take. I will give you an example. Please read this very carefully. Rule 4.7, because very, very important to understand. Rule 4.7 says on input services you have to take CENVAT credit within 1 year of invoice. If you don't take, it will lapse. But special case, exception, proviso. What is that exception? In case of natural resources obtained from government, you are paying under reverse charge, and on that credit you cannot take immediately whole amount, but you should take it in 3 equal installments in 3 years. In 3 years, 3 equal installments. Let me explain with an example that will be better to you. Say for example, something like mineral resources. Mineral resources were assigned to X Limited, say for 5 years, on a lump sum amount of X rupees, and obviously this is taxable. This has become taxable service because by virtue of amendment made in 2015 under section 66D, any service provided by government to a business entity is taxable. So this service to X Limited, which is a business entity, is taxable. It has become taxable, and on 5 years the government is getting a very good amount, maybe in lump sum or maybe upfront amount, it doesn't matter, but the amount is service tax on that payable was simply 3 crore rupees. In actual situations the amount could be more than this, but right now it is simply 3 crore rupees, right? This 3 crore rupees amount, the X Limited cannot take immediately in one go. So what it has to do is year number 1, year number 2, year number 3, spread over 3 years. So in these 3 years, 1/3, 1/3, 1, 2, 3, no? 1/3, 1, 2, 3. 1 year, 1/3, second year, 1/3, third year, 1/3. Means 1 crore, 1 crore, 1 crore. 3 crores have been evenly taken in 3 years, 1 crore each. This is what is. So because the amount is very heavy, government does not want the person to enjoy the credit immediately. So take it in 3 installments, 3 equal installments in 3 years. Okay. In each financial year, of course, but need not explain. In each financial year, you take equally 1/3, 1/3, 1/3 each. It's a good idea. Government has done a clever job, but at the same time, it is giving some relaxation. What is that relaxation? Suppose he further transfers this right for consideration, and service tax is naturally payable, and at the time, to pay that service tax, whatever is required, the whole amount required to pay service tax there, he can utilize. So that is a relaxation. So that I will explain again. So in this particular case, X Limited is further transferring to Y Limited for consideration, and of consideration, say not fully, maybe some portion, some 70%, 60%, maybe some 60% is further transferring and is retaining 40%. Let us assume, not full amount. So here, in this particular case, his tax liability is 2 crore rupees. It is 2 crore rupees. Okay? Because some portion he retained. Had he transferred the entire thing, probably the tax liability would have been more than 3 crore because he adds some profit. So let us say 2 crore. So here he is eligible to take, let us say this took place in the first year. He is eligible to take only 1/3, that is 1 crore, whereas his liability is here 2 crore rupees. Here he need not pay the remaining 1 crore from his pocket. So out of this 3 crore, he can use the amount of 2 crore. Here 3 equal installments principle will not apply. Suppose his liability is 3 crore on transfer. Entire 3 crore amount he can use here to extinguish this liability. Where the service provider has further liability, then he can use the entire thing as much as required. Suppose his tax liability is 2 crore, can he use the entire 3 crore? No. He can draw only 2 crore from this 3 crore and 1 crore of course. Next, he can meet the liability. So that is what given. Read this carefully, then you will be able to understand. Rule 4. Okay. And rule 5, nothing significant. And rule 6, of course, the more you explain, the less it would be. But let me briefly explain. Rule 6 almost has been redrafted. I say redrafted. Redrafted means almost changed. But the concept is same. But they have put it in a different way. Briefly explain. In the case of exempted services or exempted goods, no credit is available. And in the case of partially exempted and partially taxable, partial credit is available. That was the concept. That concept is even today, that is the same concept they have retained, but at the same time they put in a different style. Total amount paid on inputs and input services, and that they have divided into categories: taxable, non-taxable. They have done a lot. They have done a lot of things, and already you know, non-accessible goods, exempted goods includes non-accessible goods cleared for consideration. So that was already done, and in this budget they have already done non-services. An activity which is not a service under 65B44 is also exempted service, provided that some portion of inputs or input services has been used for that particular activity. An activity X is not a service, but for that also maybe the service provider used some inputs or input services. Then what happens? To that extent, that becomes the non-service by definition becomes exempted service. And interestingly, when you are using inputs or input services, rule 6, when you are using inputs or input services for both exempted goods and exempted services, the issue arises. It is a contentious issue. They have continued, the department has successfully continued to complicate this. I say it because for a long time, say for the last 15 to 18 years I have been watching, they have been constantly changing, amending, pretending or trying to simplify, but they have never been successful in simplifying this. Even today in 2016 they have done it. Not much. It's a round peg in a square. It is something like, so in Hindi it is said, 19-20 ka farak hai. At the last moment, particularly when they are going into GST regime, they need not touch. They have done it. They say, but let me explain. So how do you find out? So what happens when you use inputs and input services both for exempted goods and also dutiable goods, or exempted services and taxable services? What is the remedy? So that has been there. What they have done is they have given free. They say if you are able to maintain separate records, you do it, otherwise not like that. So in this amendment they are not talking about this. They are specifying. So exempted portion, input level use for exempted portion, you calculate this way. Similarly, input services, calculate this way. But technically speaking, if you maintain separate records, there is no issue. Otherwise, they say there are two options available. There were three options available earlier. If you don't maintain records like that, now they are not talking about maintaining records at all. This way you do. What you have to do? Option number one is always option number one. We know. Option one. What was the option? When you are using inputs and input services, common use inputs and input services for exempted goods and exempted services. What is the way to do it? They simply say pay 6% on goods or 7% on services which are exempt, On exempted goods and exempted services, you pay 6% or 7%. Of course, when you use something purely for exempted goods and exempted services only, to that extent you are not eligible to take credit at all, that you know. So, for common use, this is the formula suggested that has been there. But now what they have done, instead of two more options, only they have retained only one option, that is procedure under Rule 6.3a. 6.3a procedure they have retained. They say otherwise follow Rule 6.3a procedure. So, no doubt I admit that this is relatively a little simple formula compared with the previous one. Say they have categorized the under Rule 6.3a procedure, they have categorized into A, B, C, D, E, F, G, like that. So, notations, they have given notations. Under these notations they have provided, say for example, A stands for ineligible things, B stands for eligible credit, ineligible credit, eligible credit, common credit, and ineligible common credit, D. And how do you calculate that? E by F into G is C, and finally you will get G, C minus D. This formula they have given. Of course, for an industry it is inevitable if it has to, if it doesn't want to pay 6% or 7% and using common inputs or common input services, it will apply the formula. Now this is relatively easy, no doubt. Apply the formula and take care of, but as a student level, it's not necessary. Particularly for November attempt, you need not take pains. Don't try to read and practice this formula in order to make it a perfect preparation. Don't do this, because unnecessary a lot of time is spent, and which is not practicable, which is not useful from the examination point of view. Okay, so they have given this new scheme, ABCDEF scheme formula. And important, the other important area, of course, which we have to take note is, what about capital goods? Rule 6.4. Rule 6.4, when you use capital goods exclusively for exempted goods or services, where do you get the credit? You are not eligible to take credit at all. Good. But here what they have done is, they are giving you eligibility. They are giving you eligibility. AC. So, they are giving eligibility. Now what is there? Now what has happened? Simply, even if you use inputs and capital goods, today's present position, even if you use inputs and capital goods exclusively for exempted goods and services, still you can get credit. Earlier, not at all possible. Now it is possible. How? They say, for 2 years, don't take any credit. Moratorium. If you use capital goods exclusively for exempted goods or services, you don't take credit for 2 years. You are not eligible to take credit for 2 years. Which means after that you can take credit? Yes, you can take credit. But of course, exception is there, SSI units. In case of small scale industrial units, Sadabahar, you can take credit from the day one. There is no restriction. In case of other units, non-SSIs, they have to wait for 2 years. After 2 years, they can take credit. So they are giving the benefit. They are extending the benefit to capital goods also. It's a good sign. But for 2 years, they are keeping. They should have kept for 1 year, but they are keeping for 2 years. Okay. So next to this, Rule 7 redrafted. Of course, basic input service distributor. Our basic structure, of course, not significant change, but there are so many queries, constantly queries are coming from the industry. Difficulties are being raised by the industry, so they have made it more understandable. So you go through that Rule 7 input service distributor provisions, and Rule 7b has been newly added. Rule 7b, with this, distribution by warehouse was enabled. A warehouse can distribute, see, the credit on inputs. A warehouse, the inputs may be procured by a warehouse, and it has taken credit. What will it do? It can distribute it to the other manufacturing units. Suppose a manufacturer has, say, factory 1, factory 2, factory 3, like this. 3 factories, and he has a warehouse also. And inputs have been procured to the warehouse. They have come to warehouse and paid by warehouse point. And this can be distributed to F1, F2, F3, as the case may be. Just as the inputs are credit on inputs, just as inputs are distributed, and the credit is also distributed. Getting the point? So the facility has been given under Rule 7b. Okay? So new rule, please read this. And Rule 9a, annual return. So earlier, under Rule 12, there was a Rule 12 of Central Excise Rules 2002. A return called AFIS was being AFIS, Annual Financial Information Statement, was to be filed by units paying 1 crore and above by 30th November in the following financial year. So that has been removed. In that Rule 12, they have changed this to annual return. They have called it, they have made it annual return. And the same concept have been introduced under Rule 9a also. Matlab, there is uniformity. That is also annual return, this is also annual return, and almost the same, similar procedure is to be followed. Synchronization. And here, earlier, principal inputs, there was a concept. The concept of principal inputs is gone. Now, under Rule 9a, annual return is being filed, and that is once a year by 30th November every year. So read that from Rule 12 and also Rule 9a, you will find a lot of similarity. And finally, last but not least, before we conclude this, Rule 14 is a very interesting story. See, Rule 14 is a recovery rule. Wherever things go wrong, whenever and wherever something goes wrong, they will catch hold of you and they recover the amount. How? Say, suppose CENVAT credit taken wrongly. CENVAT credit taken wrongly, not used, means not utilized. Pay back. You have to pay. So that amount is recovered if you don't pay. Only that amount. Because you have not used it, there no interest element is there. It was there, even today it is there. Okay? If you don't pay, they will recover. Obviously, you know, if it is central excise under section 11A, recovery section, recovery notice, etc., and recovered under section 11 or section 142 of the customs. And in the case of service tax, section 73, notice issued, procedure followed. Okay? Section 87, I think, section 87 is there, recovery. Whereas, if you have taken wrongly and utilized, say utilized, so you are taking risk. You have utilized means you are taking risk. So what is the risk you are taking? And now you pay with interest. Not only the amount taken wrongly, but with interest. Of course, even if the amount is erroneously refunded, the same treatment. Utilized, taken wrongly and utilized, or erroneously, if the department has refunded erroneously by mistake, in the same case, you have to pay with interest. And if you don't pay, interest provisions are there. For example, service tax section 73, section 75 as the case may be. Amount collected as a tax but not deposited with the government, section 73. Of course, 70. Okay, sorry. Section 73, notice, recovery notice, and interest, section 75. Under service tax, section 73, 75. Under central excise, section 11A recovery process, and section 11 double A interest. And this is the scheme. There is nothing special. But attached to this, there was some sub rule 2 that has been removed now. So in such a case, opening stock, opening balance was said to be there, and the credit taken is said to be taken at the end of by the end of the month. Like that, there was a language which created a lot of confusion. Drop. Now, that sub rule 2 of rule 14 has been removed, dropped. That has been dropped. And one more important thing, development already you know. What about the rate of interest now? Now the rate of interest have changed, you know. Whether under central excise or under service tax, now it is 15%. Wherever 18% was there, now it is 15%. Remember this. So service interest is collected at 15%, wherever it is recoverable. So these are the developments, these are the amendments, major areas that you have to look into while preparing for CENVAT credit scheme. I think you are able to understand, you are able to get to the point, and as a quick review, let me go as a quick review. What are the things that have we had? What are the things that we have discussed? Let us see. Okay. Definitions. Matching we have already done. Rule 37B very important. And major important thing is national calamity contingent duty can be paid only from NCCD, nothing else. And things like Swachh Bharat cess, clean energy cess, you can't pay from CENVAT credit, you have to pay in cash. And plus conditions, limitations, restrictions are there for utilization. Secondly, definition wise, office equipment is now capital goods. Goods used as office equipment are now capital goods. And similarly, capital goods up to the value of 10,000 each piece are inputs. Okay, pumping of water, even if it is outside, if it is for captive use, that is capital goods. Any equipment used for pumping of water, it is capital goods. And similarly, any goods used for pumping of water is input. What is input and what is capital goods, that has been so important areas of change, right? So definition of inputs and definition of capital goods we have seen, and plus input services definition, exempted service definition, and zero tax, the transport of goods by a vessel from Indian customs stations to outside India is now getting the status of zero tax. That is the reason why that is not exempted service now, it is a zero tax service that has link under Rule 6.7 also. Okay, and plus Rule 4.7 has some significant changes, a few changes, particularly government services, government providing services by allocating natural resources. In such a case, the credit to be taken in 3 equal annual installments, subject to exceptions. And Rule 6, I need not tell you, it has been redrafted to make it simplified. But at the same time, on capital goods, the significant change is on capital goods you will get credit on everything, but after the expiry of 2 years. But the 2 years, how they are counted? The 2 years from the date of installation of machine or date of commencement of commercial production, whichever is later. Okay, so that's how you have to read all the amendments in CENVAT credit scheme carefully. And if you have got any difficulty, so feel free to contact or call. My mobile number is available with you, that is 9811737205. Please take note of it, make use of it. And my email ID is also there with you, spiravidt@yahoo.com. Please take care of this. Okay, WhatsApp, you can use, this is a WhatsApp number 9811737205. You can make use of it, right? So thank you very much. All the best.